well. One good data and one bad. The Chinese inflation numbers have eased, and that really means that you could be seeing more easing coming in from Beijing, and that is something that has been supportive for commodities. The non-farm payroll data that came in on Friday was on the weaker side, and that's the reason you have seen the dollar index holding above that 83 that had put pressure on commodities. But at this time in Europe, you have seen some support come back, especially in case of the crude prices. Those are trading slightly positive. Can't say the same about gold because that has continued to decline, reaching 1580 on the lower side at this point. Silver is seeing a bit of a support, but the base metal prices also have been quite choppy. Markets would be waiting for the US trade data that is expected in the markets tomorrow to take further direction. But till then, the choppiness in these markets is expected to continue.
Okay, let's also bring in Milind Bavishi, Head Commodity Research at Inventure Growth and Securities. Milind, hi, afternoon. Let's start off with your view on gold first.
The recent rise in dollar index has snapped the rally in bullion. Gold prices saw a sharp rally from $1,530 to $1,625 on NYMEX in the last week. But towards the end of the last week, it saw equally high selling pressure, which brought down the rates to $1,580. Now, what could bring down dollar rates is expectation of fresh stimulus from the US. Otherwise, the gold prices could continue to consolidate between $1,530 and $1,625. Now, technically, dollar index is showing a negative divergence on RSI, that is the relative strength index. This means there could be some respite in dollar index prices, and a news on monetary easing could be in the offing. However, till that happens, one has to trade gold on level-to-level basis. On MCX, gold has a critical support at 29,400 rupees. For the day, gold can be bought on declines around 29,550 levels. The target comes at 29,700 and stop loss can be placed at 29,500 levels.
Okay, Milind, you have a buy call on gold for the day. Would you have a similar view on the other precious metal, silver, as well?
Similar to gold, silver's rise too was constrained by a sharp jump in dollar index. However, for the day, silver could be bought around 53,150 levels for the target of 53,600 and stop loss can be placed at 52,900 levels.
And what about your views on copper?
Weak Chinese data and discouraging employment data from the US had resulted in correction in copper prices. However, expectations of monetary easing in China on back of lower than expected inflation is good news for copper. This can give support to copper prices and could take metal prices higher. Technically, on MCX, trend line drawn from 396 levels gives support to copper prices around 423-424 levels. This makes it an attractive buy. For the day, buy copper at 424 levels for the target of 428 and stop loss can be placed at 422 levels.
And finally, would you look to buy crude as well, Milind?
The weak employment data that has come out from the US has led to a sell-off in crude oil in the last week. However, prices could find some support due to the strike of labor in the Norway oil industry. The expectations of monetary easing in China is also a positive for crude oil prices. On a broader basis, NYMEX crude oil has a strong supports at $75 and we do not see prices going below that level in the short term. In such a scenario, a good trading strategy would be to buy crude oil on corrections. For the day, buy crude oil at around 4750 levels, trade for the targets of 4790 and stop loss can be placed at 4720 levels.